What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol RELI for Reliance Global. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We've talked about it on the channel in the past, mainly when this really large gap, that's all that's left of it, but initially it was this, right? The really large gap in the chart coming from 312 all the way on up to, roughly, just north of 5. Overall, the chart is holding up better than I would have expected, right? To me, you always got to give credit where credit is due. If you look at what's going on here, a majority, or so about half of the gap that remained, right, is still holding up as support here at the 424. And ironically enough, that's a level that we had on the chart from this area of structural importance from in the past. So it's a beautiful thing how technical analysis works. From the daily perspective, what else can we learn about this chart? Well, certainly gapping up on today's session, but fading to fill the entire gap and some on, towards the end of day there, and closing relatively weak. We'll talk about that on the 30 in just a second. However, again, credit where credit is due. If you think about higher highs, higher lows, prior day's lows was here, prior day's highs was here, today's lows here, and today's highs way up there. So again, credit where credit is due. We did make a higher high and we do have a higher low. Now the question will remain, does this hold or does it not, right? So to me, we need to take a closer look at the 30-minute intraday time frame just to sort of get a sense for how the price action is unfolding. Are there any patterns going on here? The first thing that I see if I sort of squint my eyes at this chart is just overall starting to become a bit of a rounded bottom, right? In here, the sellers did have the opportunity to fill the gap essentially all the way into that 312. I'd say, they had the opportunity because look at this, right? If you start to look at this zone right here, how we just hovered right above it there for, quite a while, that's essentially a flush point, right? The more times you test this support here, eventually it gets weak. Eventually people are going to get less interested in buying that level and you get some sort of breakdown. It didn't happen, right? So to me, that rounded bottom nature is sort of, I don't want to say promising because of course we had a fairly nasty day today, but this area strikes me as solid, okay? So 424. Now, don't go out and quote me and say, oh, you said it was solid and it just broke right on down. That's always a possibility in the marketplace, but based on what's happened here, I see it as a solid area of support. On a subsequent first touch, I might expect a little bit of a dead cat bounce off of it and not to just be sliced through immediately. So that's sort of that level there. The other thing we can talk about is the fact that we do have bear flag consolidation, but it's on top of that breakout point from in here, right? So let's do some adjusting with these levels, if you will. I'm going to start from scratch here just because, the levels are working. You can, you saw them literally working before I just cleared it there, but I'm only going to leave on the ones that are critical to the rest of the quote unquote mission, I guess we'll call it for the sake of today's video. So there's the gap underneath us. There's that 414, a very important area, but look at this area, right? So to me, this is going to start to kind of act, whoa, we got to switch tools over here on the 30-minute time frame side. Let's zoom back in. And again, here is kind of the area that strikes me as being all important at 571. It's much cleaner than all of those other levels that we had here. If we can hold up above that, fine. Look for a rotation back to the top. Maybe we get some consolidation here, and from the 30-minute time frame, what that would start to be would be a cup and handle, right? So as long as it's above 571, watch out for the cup and handle. Breakouts up and over today's high, 725, could take us about a dollar high to this high, recent pivot high, 825, and then from there we'll monitor for continuation, right? That's how I'm seeing this unfold to the upside if it unfolds to the upside in the first place. Now, again, we can't ignore the fact that from a 30-minute time frame chart, just looking at the intraday, that's certainly a bear flag. If I take out the fibs, so go back to the tool we didn't want originally and come in from the high. If we could get a click, thank you, Thinkorswim, down to the lows. I mean, clearly consolidating, again, with the clicks, geez. So clearly consolidating underneath the 38.2, right? If you look at something like this, bearish activity. So in that light, a breakdown of 575 should take us back down towards that 414, right? So it's going to go both ways. It can go both ways, rather, but your pivot is clearly defined based on everything we just discussed at roughly 575. If we hold up above, cup and handle scenario. If we break down, it's very likely we reattempt 414, and at and around this area here, I would watch out for some sort of little dead cat bounce, remembering the strength that we discussed from in here. So that's really going to wrap up the video in Reliance. If you enjoyed the video today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.